everyone, good morning and welcome to today's morning report on Wednesday the 26th of October with me, Richard Perry, market analyst at Handtech Markets. We have a fairly sort of negative open to the European trading session. The sentiment on risk appetite has just taken a bit of a dive in the last sort of 24 hours or so. It's interesting because we've seen the dollar, which spiked higher yesterday, starting to retrace a little bit. That candle at the moment, or that bar, sorry, that is sort of certainly off the top from yesterday's rally higher. Yesterday's rally came on very little actually, and subsequently was retraced into the close. But look at this oil price. I think this is one of the key factors here. This oil price has been rolling over, and the technicals, as I've been talking about in the morning report, have been sort of deteriorating in the last few sessions, and I think this is beginning to sort of play out here. And oil on the WTI sort of testing that 49.15 level, not yet broken it, but is putting it under pressure, and it sort of looks like it could be topping out near term. Now this is interesting because the strong dollar, or certainly the strong dollar moves, are still playing out through the 2-year Treasury, which continues to push higher. That sort of suggests that the market is again sort of pushing towards Fed rate hike in December. But look at the 10-year, basically not really moved at all. So that suggests that sort of concerns still really over the lack of growth, and I think that's sort of playing out through the oil price as well. So you have seen a slight increase in volatility yesterday on the equity markets. Again, that sort of reflects a bit of a more of a sort of a corrective outlook, and what we saw yesterday was the Wall Street closing lower, and that has sort of filtered into today's moves. So some interesting moves that we've got early on in the European session. Now, in terms of what we're looking out for today on our economic events, we haven't got a great deal. We had Australian inflation early doors today, beating expectations on the quarterly and year-on-year data. Now this is interesting because that's certainly is the key driver behind the Aussie outperformance today across the majors. But other than that, we haven't really got anything really this morning, all the way until the US new home sales. Oh, sorry, just quickly, the flash PMI for the services sector, that comes out to 245, expected to improve slightly to 52.3, but the new home sales at 3 o'clock is the first main bit of US data. It's expected to come in at 601,000, so it's still a pretty strong number, and considering we had that strong S&P Case-Shiller house price growth yesterday, that will be watched, I think, today. But in terms of how the fact that the oil price is driving sentiment today, I think we had oil inventories on the API yesterday coming in higher than expected, which helped to drive that correction lower on the oil price yesterday. Also, sort of some cracks beginning to appear in this sort of OPEC agreement to cut oil production levels. Who's going to take on the cuts? How they're going to be administered? Iraq doesn't want to, certainly wants to be sort of made given special dispensation. Also, you'd imagine Libya and Nigeria would be in that same bracket as well. Also, Iran. So is it going to be difficult to actually administer? But I think today's move on the on the EIA crude oil inventories is going to be the volatility factor for oil. 1 million barrels is the expected rise in oil inventories. Last week we had a very big decline, actually, unexpected decline. But also we're looking out for the distillates, which are expected to be a minus 0.1% drawdown, and also minus 1 million barrels drawdown, and the gasoline stocks are meant to be 1.2 drawdown. So could have a lot of volatility, I think, around those numbers. So that takes me to my chart of the day, which is the DAX. Now, as I said, these equity markets have been sort of rolling over a bit, and the DAX again twice in a row failed to break out above that 10,802 resistance from the August high. A couple of attempts to break out failed, and now we're sort of breaking down. We've sort of broken that uptrend. We see the RSI rolling over at 60. Stochastics giving a crossover sell signal, not yet confirmed, but certainly that looks to be more corrective. And looking on the hourly chart, we can see that coming through. We've sort of arguably a topping pattern, but we've already achieved that downside move. But the initial support of the old 10 705 level has been broken, and it's now looking to test this level little support here at 10672. That's the key sort of near-term level, but ultimately, if it broke below the 10587 support, I think that would be a key level of support broken, and that would be again more corrective. But look at these hourly MACD lines, the RSI and stochastics, all far more corrective, all accelerating to the downside. The DAX is sort of 73 ticks down now. I think rallies are going to be seen as a chance to sell potentially. I think it's sort of a continuation of this range play really. And the market could well look a bit more corrective within that range, so it could be that that rally has now sort of run its course. Little rallies could be well sold into now. So I wish you good luck in your trading today. In terms of your resistance levels on the upside, the initial sort of breakdown level 10760 area, and then a reaction high yesterday 10807. So good luck in your trading, and I will speak to you later. Thank you.